Did you know that most beginners blow their accounts not because they are unlucky, but because they break rules they never even knew existed? In this video, I'm going to break down the 5 golden trading rules that every beginner must follow. That is, if you want to grow and protect your capital. And of course, rule number 1 is the most important rule. So make sure you stay through this video so that you do not miss out on that. So let's get into these rules, shall we? Rule number 5 is that never go live with any kind of strategy before fully testing it. Now, this is where most beginners get it wrong because they see a strategy maybe on YouTube or maybe TikTok or Instagram, and right there and then they head over to the live account and they start trading that particular strategy. Of course, you are going to get maybe the first loss on that strategy, and your mind will tell you, you know what, maybe I should go on to the next strategy, and you're going to end up in this loop of always trying to learn a new strategy where you think that maybe there's a strategy out there where you're just going to be winning trade after trade. So please, if you're to use a strategy, first test it with at least 100 trades. This is my recommendation. Always first test your strategy with at least 100 trades. This way you'll have the confidence to go in the live markets with that particular strategy, and you'll be able to actually start winning with that particular strategy because you'll have data that actually backs your strategy. Try and imagine a pilot that flies a plane without even never testing, their skills on a simulator. They would obviously not safely land that plane. So you must first test your strategy, and this is how you're actually going to have that confidence to be able to go out there and start using your strategy. Now, rule number 4, which is a very big one, is that you must master your emotions, or else if you don't, they won't master your trades. When it comes to most beginner traders, things like fear, greed, the fear of missing out, all these kinds of psychological problems, and they obviously ruin their edge in the market. So even when you have the best strategy, if you don't work on these particular psychological problems, you're obviously going to end up messing up your edge that you already have in the market. For example, I've seen traders maybe after taking 3 consecutive losses on the next trade, once they're maybe like a 1 to 2 RR up on a particular trade, they close there and then because they fear their profits are going to be taken away by the market. So you do not have to be like this. Always be on top of your psychology. Try and always educate yourself when it comes to psychology. There's obviously a great book I like always recommending, and that is Trading in the Zone. Try and read this book over and over because this is going to enable you master yourself as a human being and basically get to know what exactly trading is all about. Because if you don't develop what we call a trader's mindset that thinks in probabilities, you're obviously not going to be able to become a profitable trader. So please head over to wherever you want to get this book from and start reading it. Read it today, read it tomorrow. Even when you've finished the entire book, always keep reading it because every time you actually read this particular book, it's always going to teach you something new. You must get to a level where you do not trade with your emotions, because as a trader, you must have a probabilistic kind of mindset that always thinks in probabilities. You know that you already have an edge in the market, so that one trade does not really matter. You're only going to be looking at the next 10 trades or maybe 20 trades. This is how you should be evaluating yourself, not on a trade by trade kind of basis. The other thing you could do when it comes to emotions during trades is maybe stepping away every time you put on a trade. Close your computer, go do something. Many traders maybe go to the gym. Others, like myself, this is the time I like to actually play with my children. So you could always step away because this enables you clear your mind so that you do not have to micromanage your trades. Rule number 3 is that do not chase the market. When it comes to most beginner traders, they think they always have to be out there in the market putting on trades. And trust me, That's not what profitable trading is. When it comes to trading, the best trades always come after that long wait, because for you as a trader, you might find, or statistically, you're going to find out that 90% of your time is actually spent waiting. You must develop that patience as a trader, because the execution always or only happens within just the 10% of your time as a trader. So you always have to be a patient trader, because the patience always pays. There's a common saying we use in the industry, basically where we say less is more. When it comes to trading, the less things you have to do in the market, the more profits you're going to actually be making from these markets. I'm telling you, sometimes no trading is actually trading, because it's going to be able to save your capital as a trader. So remember, you do not have to always catch every move that is out there in the market. Select your A setups, and that you know that once this happens or appears in the market, this is the only time I'm going to actually go out there and put on that trade. Then rule number 2 is that never enter a trade without a plan. What this basically means is that you need to have very clear entry and exit rules, then a defined stop loss and take profit. Immediately after you enter a trade, please set your take profit and stop loss. Do not forget this. Then of course, you must have a very clear reason as to why you're entering that trade. Do not just enter any type of trade. You always have to have a clear reason you're entering that particular trade. I'm telling you, most beginner traders lose just because they are trying to wing it. You know, they see this opportunity, they take it. They see the other, they take it without a clear reason as to why they're actually entering that particular trade. So do not be like this. Follow this rule number 2 to the dot. I'm telling you, always follow this particular rule. So basically what I mean here is that you must be able to journal your trades, look at your wins and losses, and evaluate yourself depending on the results that you already have from the markets. You must be able to treat your trading like a business. Let me ask you a question. Would you just invest in any kind of business without a clear plan? I'm sure you wouldn't. So that's exactly how you need to do it when it comes to your trading. Don't just enter any type of trade. Let there be a clear reason as to why you're actually entering that particular trade. The number 1 rule that you must never break at any cost is for you to always protect your capital. I'm telling you, this is the golden rule. If there is anything to take away from this particular video, this right here is what you need to take away. Think of your trading capital like the oxygen that you breathe. If that oxygen runs out, then obviously your life is no more. So please always preserve that capital, because if the capital is not there, you're obviously not going to be able to stay long in the game. You're not going to be able to trade these markets. So always preserve your capital. Now, when it comes to this is my recommendation. Please always keep your risk on each trade to less than 1%. You shouldn't go anywhere beyond the 1% rule. So always, if you are risking or exposing your capital to these markets on a particular trade, let it be 1% or less. Do not forget this, guys. And then of course, do not forget to always use stops every time you actually enter a trade. Please put a stop loss on. Do not be like those traders that just open a free position and they end up blowing their account in just a single trade. So do not be like those kinds of traders. I'm telling you, no matter how confident you are when it comes to a particular position you're taking, these markets do not care. They're going to end up slapping you right on your face, and you'll end up blowing up your account. So please protect yourself by keeping it 1% on each and every trade that you actually take, and then also always use stops every time you're entering the market. Remember that your number 1 job as a trader is not to make money from the markets, but for you to stay in these markets for the longest time, because you are going to make mistakes. You're going to do all those funny things, but what's going to keep you longer in the market or longer in your trading career is being able to preserve your capital and hanging in there for the longest time. So here is my question. What is more dangerous? Do you think a bad strategy or poor discipline in the market? Let me know in the comments what you think is more dangerous between these two things. Now, if you want to learn a realistic way of trading prop firm challenges, I created this video right here that will enable you to teach you exactly or show you exactly how I trade these prop firm challenges, because I always put out these weekly videos to enable you see exactly the number of trades or the kinds of trades I've taken in the market to basically show you a realistic way on how you can start trading these prop firms. So check it out. It will definitely be able to help you.